let's start the chart and just find the greediest untested point. So it looks like it could be in here somewhere. So we need to immediately start looking at this, and we've got this one here, and that's tested, and so that's fine. That's 90.92. So then you have nothing left back here, right? Like you've got that there is tested. This here is tested. This here is tested. So you'd be right here, right? And even if you wanted to go to the top of the candle, but you would actually have the base, right? So you have kind of have two different levels, but we can see that nothing has tested this. So as long as we don't have anything to test either of these levels, it's perfectly fine. And this is that moment that I was talking about where it comes close, but is it really testing that level? Because you also have this. The problem with this candle is this is a tested range. It's pretty close. It's a tested range. So we can take off the top of this and we can leave that and take a look at this here. And you can see the same thing happens here. So that's that same level that got deep divin, right? It didn't bounce off 91.14. It started to open a hard close, right? Like so this opens its candle down here, right? And starts to open a hard close to dump the move. But again, this is where that deep dive happens, where you don't have, you indeed don't have a distribution candle close off of it. So technically, this level was broken. This one was not. So you can see the difference, right? Like you can see this level is hard closed here, and it never really reaches 9100. So this is a scenario where you are not up here in price looking to knife catch 9100, right? Because this stuff develops in the moment. So, you know, maybe if the price was 9145 right here, and you're looking at, oh, where could I possibly buy? In that moment, 9100 would have been a great level to buy. So you could have front run it at 9100.01 or 02 and possibly even 03, which looks like somebody did. 9114 is kind of the next untested level. So you know, placing an order here at 9100, which is the greediest level, would have been perfectly fine. And so here we'd be expecting to get filled at, say, even like 91.02 and 10 cents, for example, right? Price comes down, that's fine. We're still expecting it to come down. Breaks down a bit here, moves up. It's fine, still breaking down. And then right here. So your order never gets filled, 91.03. The level's untested. It's close enough to kind of call it tested, but not really, because as you can see, this is the same thing right here, 91.14, 91.16. Oh, it's close enough to be considered tested. Well, no, not really. It's actually not tested. So any orders that would have stopped, bought, and triggered up actually never executed. So 91.14 now becomes perfect to deep dive this level to like something like 91.05, 91.06, or even to wait to see if 9100 gets hit here. So this order was actually missed, and it's okay because it wasn't that big of a trade. But now I'm fully expecting, you know, you come down to this moment in the future here, and I don't know wherever you are right now, nothing has come close to it. I would fully expect 9100 to hold, but not on that price. So where am I setting my order, right? So like, where would I set my order here? Well, you can look in the past and you can say, okay, well, you have this level here, right? Well, okay, that could be a possibility, right? Okay, what else? Let's find some more possibilities, okay? Let's look at some trends, because we need to justify, like, okay, we know the potential for it to like deep dive its level is there. So now we need to maybe find some trends here. So I've done this work already, so I know it's May 24th. Yeah, adapted this out earlier. So it was from here originally, and then it goes to here. Oops, and it goes to here, and then you can see it breaks there. So now it's right here, and then it breaks to this one right here, and then you're right here right now, right? Like you're right here hugging this trend right here like this. Oops, wrong one. You're coming. You're right there. It's like, where can this thing deep dive to, right? So let's look at what it could possibly do. It can hit trend, yes. It can ladder off to this point, yes. So that this becomes a moment of, when in time is this happening? Because if it happened, say, right here, it could deep dive trend, for example. It could go like this, deep dive trend, and create a base from here to here off the whatever level this was in the past. It could create a base, kind of how I've crossed my arrows. So it could go like that, deep dive trend, and then come back up, hold trend, and then move up, okay? If it was for, say, a little further along, you lose that ability to deep dive that trend as much, right? You lose that ability to deep dive that trend as much because you're kind of in this weird in between spot between laddering off this level, which is another possibility. You could simply ladder a little bit off that, just like this one here hits trend, this ladders off that. This could go float a little over top of trend, right? So you're less likely to be in some kind of middle point between all of these things.
Obviously, good call for risk assessment here against trend, right? I think that goes without saying. I'm going to just keep reverting back to risk assessing this move here to seeing what the greediest part could be while still keeping the integrity of this move and always keeping that in mind. The polarity point keeps that integrity of the move. So just, again, always to keep that in mind, that would be the first thing I kind of advert to here is, yeah, okay, you have trend, and is there something even deeper here? Can you recreate this trend? This is the pitch of this trend is pretty flat. So it almost looks like a 6 or 7 degree angle on this trend. It's pretty small. So I don't really know how much further you could go below this here. You know, if the trend was more aggressive, I'd say, oh, this trend could be dragged out and recreated. So I don't think there's much of a case for that here. You can just kind of tell by the pitch of the trend, but possibly where this trend starts, you could maybe, if this trend goes back quite a bit, then maybe there would be a call for that. But, you know, at this moment, without that knowledge on our screen, I would simply say that the integrity of this move is simply staying above this trend here. So you could deep dive it. And I would wonder where this trend starts and if there could be supporting levels to show that this trend can still be intact while deep diving. Then I would look at that to indicate the deepest part of the move, not necessarily the trend, but it could indeed be the trend. If there's, you know, this is pretty close right here, or if it's way over on the left side somewhere, there might be some things that you could pick up in there.
That deep dives you to create a base. At that point, you're kind of more likely to create a ladder if you're deep diving and then go up. The further you come out here, you could possibly even see what the base is from back here. So I believe this was a backside 1 hour right here. That could be another possibility. Backside 1 hour. I believe that's where it was. I'm pretty sure that's what I think it was. This one here, actually, on a different time frame. I think it's this one here. Yeah. So this is another possibility. Hits this again, right? Deep dives that, holds trend, right? Because we're looking objectively at the 9100 level. We're not looking at this level here. We're not looking at this level here. We're saying, oops, I deleted the wrong one. We're not looking at this as, because that 9092 has already been tested. So we're not looking at this as, oh, let's buy trend. Oh, let's buy. That's not the important part. Let's deep dive the trend. Let's deep dive the ladder. The important part is if that hold level holds, because it's going to do this exact same thing that we just saw. It's going to come and do something like this, or, you know, bleeds out, whatever. It doesn't matter which of these it touches. The most crucial thing is that this holds, right? So it can go like this, and then go straight up, and then hold here, and then it will go straight up, because the deeper this goes and confirms this hold level, the more likely it is to bounce that much higher up, right? So you're not looking at this to say, oh, I've got 4 and 5 different spots I could buy. You're looking at this, again, objectively at the hold level that is there, okay? So objectively at the hold level, saying that needs to hold. What can I deep dive here? Well, we can see ladder, ladder, ladder. So you can kind of think maybe 9058 might be a good spot. Maybe even a bit higher, maybe 9063, 9064. Deep dive that level by $35. Look at the spread that's in the move, right? So you've got something like 30, 40. Yeah, if you've got 44%, you could probably go for 30 of it. So where does 30% of it leave you? You know, you could probably go for 3/4 of that deep dive, somewhere between half and 3/4. So if you were going for half of that deep dive, you could say, okay, well, even here is a ladder point. So we can say even 0.6. 0.67 here. So it has to kind of ladder that. So we're just going to drop back a little bit. So find that ladders here.
Yeah, definitely too zoomed in on that move. This is quite an angled trend here once you zoom out and see where the origin of that trend actually is. So you could make a case for just readjusting this trend. How many times this gets hit though? How much it's respecting this move? So in this moment, you'd really have to justify it on a higher time frame. And I think that's something pretty important to talk about right now. Let's say this trend is created on the 1 hour. Okay, so let's say what we're looking at, it's red. So I'm going to assume this is the daily. Let's say it's blue. Okay, if this was the case and this trend was blue, you'd really have to justify it on the 4 hour where you could adapt this trend down. So you'd really have to go up a time frame here to say, okay, you have broken this trend, you have hard closed it, you move down, maybe you ladder off this, or you ladder somewhere just below it, but come back above this, making this a potential creator of what was the origin level, and that confirming the origin level. So that would be the event that would occur there if you were to move this trend down and go below this level. So that's kind of important. Let's imagine this hits the leg of a move. This now opens the candidation. If you go past that level, right? You go past this level, that now opens a candidation that if there was an origin level that this connects to, you can indeed go down below that, making it hard close back above this point. That's the origin level. So that's the candidation where this could be going below this. So our trend in this scenario, we're pretending is blue, which is the 1 hour, which means we adapt the 4 hour part of the move. So we would now reset this as the 4 hour, and we would look to go 4 to 4 hour. And then if we go past this, we can go past this if there is an origin, a case for an origin here, making that kind of the polarity with the trend underneath it. So a lot of components combine there to tell you if you can or can't go below this. Now, it's the red, so I'm assuming it's the daily. This would be the same thing. Now, we would have to try to create the weekly. So if we are going to adapt this trend, we need to hard close this on the daily, adapt it on the weekly, and where it can deep dive this, again, just going through that one more time, because we haven't talked about that yet, where it can deep dive this is where this has tested a leg and it can create an origin. So you'd have to find that leg that this tested, if that's an origin level, the leg that tests, and say, okay, this is possible for an origin level. So we can go down below this and then back above it in order to create this trend as a weekly. So let's assume this trend goes further, even back further. You can indeed go below this point. So we're just going to go a little bit down and over on the screen. So we can go down here to around, I don't know, we'll just say 88.50. That's much lower because this looks like it's about 8,900. We can go to 88.50 or 88.25 or even lower, assuming that this trend still stays intact, which it probably is, and going deeper one time frame while going below this. And that makes the difference, this hitting a leg of a move, whether you can go below it or stay above it. If this hit the leg of a move, that means this next candle confirms the origin. So you go below it while staying above the creation point of this to keep trend intact, to confirm this as the first touch of the origin, which gives you your deep dive of the move, comes back above this, creating the origin. So that's the confirmation of the origin being created. And this was the setup for it. And it goes below it while staying above this. So now you have to go back to the beginning of where this was created to see, okay, what's the deepest point of that we could go to that still keeps this as an origin. So the deepest point here while keeping this an origin. So above this and below this, the levels between there becomes the confirmation of that origin. Hope that makes sense. That's a lot to kind of imagine, a lot of moving components together. But that would give you your risk assessment for the creation of an origin. Below this point and above the trend creation, you will have a marquee of levels that you can say, those are what we're targeting in order to create this origin that can break this trend, but use it to create the higher time frame. If we've had enough time pass, because this looks like it's had enough time pass to create a weekly. If these were 5-minute candles, that's not possible. These are 1 hour candles. That's a big difference. If these are 5-minute candles, you're not going to say, oh, a bunch of 5-minute candles, and then you have a monthly. Probably enough time hasn't passed, right? So just want to make clear of that.
Here, we'll say 0.6 is pretty safe, because then it's going to deep dive trend. It's going to deep dive the next base of the move, just like these deep dive the move, and they're deep diving it less and less. Really the hard close the base of the move here at 90.58. You're gonna break this thing down in a pretty wicked fashion, right? So if you're gonna hold 9100, you can kind of just create a ladder. You can't go too past 90.58. Like these ones are fine, but this also happens relatively quickly. So you can take half of the spread, right? So you can say, okay, 0.6 is kind of the max here, right? It would be a miracle if we hit the base again. The furthest they could go is probably like 90.44. Ladder off this point. So you could go for somewhere between half and 75% of that. So if we're at 0.6, half of that would mean we can kind of go like this. We can go, Yeah, 90.73 looks good. We can even go for 3/4 of that, which would be 45%, right? So we could even go something like that, which leaves us pretty close to that level. So we can kind of go some kind of in between level there that's going to ladder this, right? So you've got a decision to make there where you can say, okay, and 90.100 is the level that has to hold. So in the case, and let's take the replayer tool off here, see where we're at right now. I think we're current. Exit to move. Yes. So in this case here, again, you're looking at this and you're saying 9100 is important. Objectively, that's the important level that we need, right? Like this is the level. And we are only going after a deep dive on this move because our last buy was so close, but didn't really hit the level. So you are expecting somewhat of a breakdown, but not to not actually hold this level because it is an untested hold. So this level is likely to hold. It's just that it's going to deep dive it to the other levels, but still maintain its integrity in the move. And what I mean by that is it's still going to hard close above that level, not hard close in distribution below that 9100 level. Hard closing in distribution below 9100 is trouble. It means you're trying to hard close 90.58, which looks like the base of the move here. Just quickly, without going too crazy into finding the base here, I believe it's 90.58 here. Looks like can call it 90.60. A little bit of error. If you were to buy 90.65 and you hard close 90.60, there's not a big loss there. If you hard close 90.60 and you had bought 9100 as a knife catch, man, there's a big loss there. And this is a pretty big difference between when we actually buy a knife catch versus trying to deep dive a level against reverse information, trends, candle wicks, typically not candle wicks like that. You've got kind of these reverse levels. Trend, you've got 90.58, which is the base of the move. What could it hold? And can it front run it? Like, can it front run the base of the move? Sure. So what would be wrong with like doing 90.61, 97, for example? I could hit the base. It could just bounce right off of that base. It looks like it tried to break the base back here, right? Same thing happened back here. I'm sure it deep dived its level from even back here, or, what is it right here? Can even just take a look at this and see what had happened here. And I wonder if there's even a greedier moment here. The 3 that was closed. And then about the 5 minute. The 5 minute was closed. Is there a 15? Come on. Where'd we go, Trading View? There is a 15-minute closed here, but the 15 minutes starting to get a little muddled. So you simply have the whole of the move, the base of the move holding it up. You can even go back to the 1 here and try to find that level. Yeah, it's right here. It's as clean as day. 9100, 9103 actually does bounce off that level. See, that would have been an interesting spot right here, because look right here, you had a choice to make between buying this level and deep diving into the base, right? So let's see. Hits that level again. It bounced up. You can see it's kind of failing down. Most people would panic here and get out of the trade if you had bought this, right? And so let's talk about a few different scenarios. Scenario number 1, you bought 9100, comes up, pulls back down, and it's riding the level like this. Break.
Let's talk about that for a second. You got a 1 minute level here. You buy 9100. You know you have to, at a minimum, develop some kind of shield in the trade, right? So depending on your risk and how you've assessed this, hits 9100, comes up. Maybe you're giving this 5 or 6 minutes in this trade, right? So you've got 1 minute, 2 minute passes, creates a level, breaks that down instantly, hits again, tries to get over top and create something here. It doesn't. How many minutes have passed by where you need to get out of this trade because you've assessed this and you're saying, okay, maybe this is a 10 out of 10. I'm not sure. But anyways, give yourself that time frame mentality here. Just 1, 2, 3, 4, 5, 6 should be out of the trade if you can't, develop something there in the first few minutes. Now, I don't know what the risk assessment is on this. Like, I haven't done this completely, but that right there, like if you were to go to this move here, you'd have very much the same thing. 1, 2, 3, 4, 5, 6, develop a level. It also becomes your shield. Lose that shield, get out of the trade, right? Now, again, this is not assessing a 10 out of 10 scenario, but a good reflection of that time frame in how, if you don't create a shield in your move and you're trying to catch a knife, it's like, okay, well, you know, you got to really make sure you're paying attention to the creation of those levels. You can't go through a 3 minute, can't go through a 5 minute here to see what's actually happening.
Breaks down instantly.
But it's always good to keep an eye on
That's
that.
the point
right?
where you
Like,
should be
always
out of the trade. But look what happens here. 90-60 is the actual base of the move. So if you had taken the spread on this, you would have been in that same scenario where you might have actually front run that level a little bit. 90-60 ends up holding, even there too, right? Like you can see it right there, even there, it ends up holding. And it gives more incentive to be in this trade. And I believe you actually would have gotten liquidated on this if you're at 9100. So that's the benefit to deep diving a level, right? Is that you can look at the information below. And when you have a base of a move like this, right? Because really right here, like if you're looking at this move here, let's go to a bit of a higher time frame. You know, that's the whole level there. And you can see it fails down and hard closes, which goes straight to the next level, which is perfectly expected, right? Even a higher time frame, maybe.
Need to get over that
15
time
minute
frame
right there.
In that move there, regardless of this deep dive.
So if this is the 15 minute right here, right,
still need to get over that.
You can see that same thing happens where it deep dives a level and comes right back up and ends up hitting the base of the move, which is exactly where it's going to keep bouncing off of until it breaks this base of the move. And then the move is completely collapsed.
Base there, the origin.
I can get rid of some of these other ones. What do we have here? Get rid of this. And that's held there. That's held there. You can see it laddering here. But then you're still drawn back to that same moment where 9100 really wasn't hit. And there's not much below left. You know, I don't even mind this right here because you deep dove trend, and that was, it made sense. You said, okay, here's a level, let's deep dive trend. That makes sense, having the level here and saying, okay, you can deep dive it as long as you don't hard close this base of the move, bounce off trend. And this isn't hard close on the time frame above, right? Like this is just a 1 minute candle. You're not looking at greedy 1 minute holds here. You're looking at the base of the move. This is something completely different. But this is the exact same thing as to where you make that decision. Oh, do I knife catch the base of the move, or do I deep dive it to what makes sense? And then so this right here, you know, that trend was there. So if you have the base of the move, why couldn't you have deep diven the trend?
Dang. See what's going on with Bitcoin. Bitcoin is still laddering its move, but that wraps up our 2 lessons for today. But let's just see what's going on with Bitcoin here. Yeah, next month is going to be awesome. I'm really excited for next month. I'm really excited for those career building pieces and all that stuff that I've got planned here. I'm really putting everything I got into mentorship, like I've been saying for the past few months here, really gearing this thing up. I won't always be teaching mentorship. That's the thing. I won't always be teaching. I've said it, you know, recently as well. I'm giving mentorship probably 1 more year, and then you know, we'll see how things go. But that's kind of the grand plan. So really pushing up mentorship to as hard as I can right now. So I'm really excited for next month. I'm really excited to get into that career building stage and those career building pieces. 5 minute origin. Let's take a look here. Looks like you may be onto something, my friend. Let's see what we got. Where are you at? 41.73. You've got this right here, right? What am I looking at right here? Let me see. 41.937. 41.937. 5 minutes. 42. I see this here, 42.13. Start marking a few things here. This one here, you've got here. Open this too and see what we've got. Breakout trigger. You're talking locally on the move. Oh, I see. You're talking the local part of the move, not that. Okay, let's go take a look. You're not talking about this. You're talking about the local part of the move. Although these would be candidation as well. You're talking about this, I'm assuming. Yeah. Yeah, you can see that like as clear as day right here, right? That's the current part of the move that's holding this thing. Oh, I see. I see. Nice spot out. Yep. 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 It's laddering the bottom side. Got the back side that got tested here. Moves through the front side there. Front side there. It's got the nice. It's probably a different time frame, but we're just using this as kind of like a guide in the moments. We're probably got this on the 15, right? Something like that. I'm assuming on the 15. Yeah, the 15. You can kind of tell it's the 15. The 15 there. Hard close walks through to the lower time frame. Breakout there. What about origins here? Do we have anything on the side? I haven't even had the chance to look at this. You got nothing from back here. You've got potentially that this can ladder the move here. Let's start from the 4. This is just as bad. I should not be doing it on that time frame. So you've got this right here potentially. That could ladder the break of the move. Aha, that's pretty important there. So if you hit this again, there's your breakout, your big term breakout for the future. That's your larger breakout for the future, right? It's becoming pretty obvious. I would almost think that back here, maybe there's something else even. 15 can't be right there, and it can't be right here because you break over it there. This one's not tested in that current part of the move, I don't think. Can't be the hourly either. Don't think it's going to be a 5 right there. No. 5 right there. That's hard close there. No. So you've got like what could be potentially a 4-hour origin starting. Boy, oh boy, that would be a big one. Break that and you're back moving up. Anyways, your breakout to there, I don't think that holds you. I think now you're back in this region somewhere to understand what stuff happened here. You break this, it's what it looks like. That would be a lethal rejection. I agree. If that rejects, you're really, really, really in a bad spot. You're really, well, you're back down to trend at least, right? That would be go over this and pull back, right? Letting this be the origin. So you have to find out what point above this rejects the move. So you finally test this right here and then pull right back. So this becomes your 10 out of 10. I don't know how many pseudo categories I would allow at this point, because if I'm trading against this, I would adjust this to be a 10 out of 10 against this if you're breaking over that and falling. Not that, you know, you have a pseudo range and it comes back down, because that's different. Like, are you creating an origin here and this could possibly be a 10 out of 10 point? You know, you might just hit this and fall straight down as well. So that's pretty important to realize there. That's a pretty important part of the move. I would agree with you where you said like lethal rejection. I would actually agree with that. This thing is really fighting. It's going back and forth pretty big here. I think real estate is a decent investment. There's a real estate company. This is the only one I know of. I think they're the biggest. So I work with, well, I won't say who I work with, but because that's NDA, but I work with a large controlling piece of REAX. And what can I say? Not much. They had asked me to take a look at this a while ago, and yeah, this is what I found on REAX. This is a real estate company. I think they're the biggest in all of Remax, right? I think they're the biggest in all of North America. I think the reason I'm saying this is because I think real estate's a decent investment when it's personal, obviously. Personal real estate is a pretty good investment. It's one of the ways I keep diversified and not having everything in stocks is having stuff in real estate as well. There's a lot of money to be made in real estate, but not like house flipping and owning rental properties. That's not the smart way to do it. But just like your own personal house, as long as you're okay moving, you do it when you're young. You're okay moving a few times. You just look for really good opportunities in real estate. It's a really good way to compound your money. Like a really good way. I've made millions in my own houses, like buying and selling them. But I don't agree with making them into like rentals and stuff like that, because then you're into a different bracket. So yeah, I think real estate is a really good investment. Actually, part of one of the reasons I moved, my house was too small, but it also made sense real estate wise because the Canadian markets blew up. So it was really important to make us another smart move. Real estate is one of those interesting ones where the markets explode and everybody overpays for properties. So when you have a good property and your markets are exploding, like especially in Canada, your markets are exploding, it makes a lot of sense to sell while the price is high and then to reinvest into a new place where maybe the markets are still behind a little bit. Like that's always been like a great way to make money in real estate for anybody who's looking at making money in real estate, because you can make a fortune in real estate for sure. But I don't agree with the way that people talk about it, like, oh, I've got 500 rental properties. That's just like a big leverage against leverage game. That's not what I'm talking about. I'm sure there's money there too, but it's very different and it's not liquid. High risk, cash poor, asset rich, no liquidity is not really a fun way to live. I would not want that. But like your own housing and properties, like I've always been a big advocate of that. Whenever the markets blow up, you sell and you just look for somewhere else to invest, a new property to invest in. I think that's it for today. We're just kind of hanging out and chatting.